Hello, trading is closed on June the 10th, 2015. I had some calls for yesterday. The first was that 2088.50 would print by early today, and that obviously happened. The next one at the moment looks like a rather tall order. We have a target of 2076.73, 28.5 points lower, most likely to print by early tomorrow. Is that really possible? I don't have anything new from the mejt system. It did say there was a false drop and that prices would recover to this line, which happened to be true, but it's also giving us this price as a target. What else do we have? Well, here's the percentage of stocks with favorable chart patterns. You'll see that despite the market having a good rally, this keeps on dropping, which is not the way to move higher. This is the put to call ratio. This is one of the furthest it's traveled below its lower Bollinger band in a long time. And if you look at the equity options put to call ratio, it's way below its Bollinger band. I think the last time it was this far below the band was in July. So we have excessive public optimism. We have a rally right to, but not through Fibonacci resistance. We have gapping up, unrestrained positive action, no pullbacks, hitting a new high early in the day, and despite hitting a series of new highs throughout the day, or at least almost beating this one, but not quite, we couldn't close over any of those highs. And if maintained at tomorrow's open, it usually leads to a drop. We have a trend line here, which by DeMark's criteria has a break, which is a valid break. The odds favor this trend line holding and a drop to about 1900. If we trade briefly over this high in reverse, I don't think it changes anything, but that's not what I think is going to happen. I think this is a perfect setup for a stilt-like drop right from the open and lasting at least for about 1 hour-ish. Looking for a big drop tomorrow starting from the open, but if I'm wrong, it should be obvious in the early trade. And that is today's call.